If you're only tracking stock prices and news headlines to make investment decisions, you are already late. Because by the time something shows up in public markets, private money has usually acted first. Having spent 6 years in investment banking, I've seen this repeatedly. Private capital is often the leading indicator. These funds deploy billions quietly to position themselves for structural shifts long before retail investors even notice the theme. Let me explain how the game actually works in simple terms. A company starts with an idea. Venture capital steps in early, takes risk, and funds growth. The business scales. Once it becomes profitable and stable, private equity may enter, tightening operations, improving margins, restructuring management, preparing it for a bigger exit. At that stage, early VC investors often exit. Then eventually the company is either sold or listed in the public market. And that's when the retail investors like you and me finally gets access. By the time it reaches us, two layers of smart capital have already validated the business. So how do you use this information? Well, there are three simple playbooks that you can leverage. First is listed proxy strategy. When a PE fund aggressively buys into a sector, let's say hospitals or logistic companies, it doesn't make sense to wait for 3 years for their IPO. Instead, look at the listed players in the same industry. Institutional conviction often lifts the entire sector. Second, pick and shovel strategy. Instead of guessing which AI or deep tech startup will win, invest in the publicly listed infrastructure players that provide to all these AI startups: data centers, power companies, chip suppliers, logistic providers. Because during every gold rush, the shovel seller wins consistently. Third is the incumbent upgrade. Watch large listed companies acquiring VC backed startups. When a large corporate firm buys a fast growing technology startup, they are not just acquiring revenue, they are upgrading future growth potential. That often becomes a valuation trigger. So you see, smart money moves quietly in private market first and loudly in public markets later. In part 2, I'll break down exactly which sectors PE and VC are pouring billions into right now and what that means for short term and long term investors. Drop a simple track in the comments if you want me to tag you when it goes live. If you want to stop reacting to markets and start anticipating them, this series is for you. I've added more insights in the caption and I'll see you in the next one.